good morning Trinidad and Tobago, and welcome to the Bourse Report. Well, this morning we're taking a look at two stocks on the manufacturing sector, which have had somewhat varying fortunes over the past couple of reporting periods. We're talking, of course, about Angostura Holdings Limited as well as West Indian Tobacco Company Limited, or WCO, as it's affectionately known to investors. Now, both groups would have reported earnings for their 6-month period ended June 30th, 2023. Let's take a look at how both groups would have performed and what investors might expect in the coming months ahead. Turning firstly to Angostura Holdings Limited, we can see that the group would have generated an earnings per share figure of just about 38 cents per share, which was an impressive 15.2% increase on the 33 cents recorded in that prior comparable period, the 6-month period of 2022. Driving that performance was an increase in revenue of 3%, moving from 460 million to just about 474 odd million. Gross profits also up 9.2%, from about 233 million to just about 254.5 million. Overall profit for the period increasing from 15%, from 15% rather, from 67.6 million to just about 78 odd million dollars. So certainly good reading there. Very positively in terms of trends for Angostura has been that persistent increase in revenue over the past four comparable periods, with, of course, in the half year of 2020 and 2021, those fairly significantly COVID-affected periods, increasing with revenues from 358 in that half year period of 2020 to 474 million in that most recently concluded period. And of course, that period on period grew in revenues that 3% with a major jump taking place in that half year period of 2022 over 2021 of around 24%. Now, margins have also been improving for Angostura Holdings Limited, and we can see a persistent and sustained over the past couple of comparable periods increase in those operating gross and profit after tax margins. Profit after tax margins in that pink line, for example, increasing from 11.4% in that half year of 2020 to 16.4%. So that means Angostura Holdings Limited is doing a better job at converting every dollar of revenue generated into profits for its shareholders. So certainly good reading and a very positive trend overall. Now, when we take a look at just the valuation of Angostura Holdings shares, however, we see that perhaps the share price appreciation has gotten a little bit ahead of earnings trajectory and earnings generation, with that price to earnings multiple increasing from about 21 times in the half year of 2021, for example, to just under 30 times on a trailing basis at the half year period, with trailing 12-month earnings per share hovering at around 76 cents per share. So we can see that it is a tad bit expensive in terms of the price that per dollar of earnings generated that shareholders or potential investors would be paying for Angostura stock at this point in time. So at a price earnings ratio again of that 29.7 times, Angostura is trading at that $22.55 level and offers investors a dividend yield of 1.6%, which doesn't really stand out versus the sector average of 3.6%, of course, adjusted for Unilever's fairly significant and very likely one-off dividend payment that would have been made in prior periods. But on the basis of continued revenue growth, those continued margin improvements, but again, keeping an eye on those relatively high valuations, Bourse is actually upgrading its rating on Angostura Holdings Limited to market weight from underweight for the time being. Turning very quickly to the West Indian Tobacco Company Limited, or WCO, well, the group would have recorded an earnings per share figure for the 6-month period of 40 cents compared to 60 cents in the prior comparable 6-month period. At 33% decline, there was a 20% decrease in revenues from 385 million to just about 307 million. Overall profits declined that 33% from 152 million to just 102 million. So of course, not very good reading for potential and existing WCO shareholders. However, when we take a more granular look at the earnings for WCO on a quarter over comparable quarter basis, and we're talking specifically about the second quarter of 2023 versus the second quarter of 2022, we can see that there was actually some improvement, a 12.5% increase in earnings from 24 cents to 27 cents, with revenues fairly flat at around 182 million and overall profits increasing from 60 million to 68.1 million. So overall on that 6-month basis, not very good reading. On that on that quarter over comparable quarter basis, we can see some degree of stabilization in revenues as well as an improvement in earnings, which might be very, very preliminary signs of some stabilization of Whitco's performance. We'll wait for the subsequent quarter to see if there is that continuing trend. Overall, however, margins continue to remain under pressure, with that profit after tax margin declining to 33.3%, which is somewhat odd for Whitco, which has been traditionally a very stable margin company. For example, in that half year of 2020 and 2021, those profit after tax margins hovering around that 45 to 46% level. So, of course, with those margins in mind, investors will be keenly looking to see if there is some stabilization in performance, and of course, whether or not that dividend can recover, which has fallen from that 39 cents per share on a half-year basis to that 26 cents per share, most recently declared at the half-year point of 2023. So at $11.25, Whitco is trading at a price-earnings ratio of 13.4 times, which compares favorably to the sector average of that 26.8 times. And it also offers a fairly attractive dividend yield of 7.6% on a trailing basis, compared to that sector average of 3.6%. Again, take that trailing dividend with a pinch of salt, given that there may be adjustments or could be adjustments based on performance to Whitco's dividend. But with those revenue challenges in mind, that narrowing margin, but those fairly attractive valuations and an attractive dividend yield, Bourse is maintaining its market weight rating on Whitco for the time being. Well, that's it for this week's edition of the Bourse Report. For more information, you can give us a call at 226-8773. Email us at invest@boursefinancial.com. And of course, check out our website, bourseinvestment.com, where all of our research is absolutely free. And of course, you can catch this article in the business section of today's Trinidad and Tobago Guardian newspaper. Stay safe, happy investing, and we'll see you next time on the Bourse Report.